Hey, what's up, everyone? Good morning. Morning. Hope everyone's doing well. Welcome to another update here. It is Wednesday. It's the day before the CPI data. CPI data comes out pre-market here on Thursday that we're going to take a look at with our team in our trading room. But in terms of today's news, there's not really too much. Yesterday, we did talk about Jerome Powell. He was doing a press conference in Sweden and mainly climate talk, refused to talk about the U.S. economy, and that's fair enough. Didn't really do too much to the market. And the market did present somewhat of a rally into the end of the day, so that's pretty interesting. Based on that movement that we got, we closed pretty well. We rallied overnight slightly as well, but we haven't really breached too many of those key areas like 39 39.75 region, right? 39.75. If we break that, and I think we do get into 4,000s, I think the higher end maybe 450 based on the CPI data that comes out tomorrow. I think CPI data that comes out tomorrow is going to be initial pop in the market, right? Softer data, and that will bring us to I believe 7-month consecutive cool down in the quote unquote inflation data. Still a long ways to go, but that's kind of my expectation for that realistically. Yesterday, Jerome Powell, right, like I said, didn't make any specific comments based on the U.S. economy and the path of the rate hikes, which didn't come as necessarily a surprise given that the international symposium he attended was focused on central bank independence. As such, he did say that independence was critical to central banks, especially in times of inflation and when dealing with price stability, part of the central bank's dual mandate and other being full employment. So he had a little quote here: restoring price stability when inflation is high can require measures that are not popular in the short term as we raise interest rates to slow the economy. But the absence of direct political control over our decisions allows us to take these necessary measures without considering short term political factors. So, Powell also discussed the Fed's role in incorporating perceived risks associated with climate change. That was kind of the center of attention throughout this, right? Promoting a quote unquote greener economy. Now, to add to that, in terms of overall growth, global growth, the World Bank slashes 2023 forecast by almost half, right, from 3% to 1.7%, as elevated inflation, higher interest rates, and reduced investment, and Russia's invasion of Ukraine constraints a lot of economic activity to come, and the expectations aren't for necessarily that much growth. And that's a pretty big cut, right? Almost in half. If it was enough, the Washington based lender also warned that any new adverse shocks could push the global economy into recession, which would mark the first time in more than 80 years that two global recessions occurred within the same decade. So, global economic prospects: the crisis facing development is intensifying as the global growth outlook deteriorates. This is what the World Bank Group president David Malpass said. Emerging and developing countries are facing a multi-year period of slow growth driven by heavy debt burdens and a weak investment as global capital is absorbed by advanced economies faced with extreme high government debt levels and rising interest rates. So weakness in growth and business investment will compound the already devastating reversals in education, health, poverty, and infrastructure, and increasing demands from climate change. That's a lot, but it was a quote. And the expectations are we still are feeling the effects of what came over the last 2 years for the general growth of the global economy, right? In the US, for example, the economy is expected to experience a half a percentage point growth in 2023, 1.9% below previous forecasts, and the weakest performance outside of the official recessions since 1970. So there's a lot of debate about whether the U.S. and the Eurozone will go into recession. Everyone's been debating that. Even some Fed speakers say that they no longer expect the Eurozone to drop into something like that. But realistically, only time will tell. But based on the economic factors, it's not necessarily something that looks avoidable as it currently stands. So with that being said, I don't necessarily have too much else on the economic front. On the news front, we pretty much are just looking into CPI that comes out tomorrow pre-market at 8:30 a.m. Eastern time. And leading into that, we could see a little more trickle to the upside. I'm going to be watching this overall market here today. I want to see them fail, honestly, between 55 and 60, 39.55, 39.60. We're kind of trading at those areas right now. I want to see price drop from that region into the low 30s where they can pick it up and potentially trade that 70. That's kind of what I'm looking for. This bid has been pretty weak. I think overnight been pretty weak, and I don't think they sustain it that well throughout this session, maybe into the end of the session. But as it stands, I would like to see them kind of fight for a little more of the sell side range before we do pop off that CPI. That's the expectation for me, at least into the coming session. So with that being said, thank you all. We'll see you tomorrow for CPI and hope you're all doing well. Have a great trading day and we'll chat soon. Also, before I leave, we have launched a free member site at Trade Pro Academy. So go check that out. You can get access to a lot of things. On the free version of the website, meaning that you'll have your own login and whatnot. And we wanted to give you guys access to a lot of the stuff that a lot of the paid members have, so you can get an idea of what exactly goes on. And don't forget to check out community.tradeproacademy.com for our free Discord chat, where we do chat throughout the day and provide you guys with some ideas and whatnot pre-market and throughout the day. So hope everyone is excited for that. I'll see you guys for CPI tomorrow and chat soon. Take care and goodbye.